Hello, everyone. Matt Somberg, partner and co-founder of Gottfried and Somberg Wealth Management. Hope you're well. Hope you had a great Thanksgiving with your family. Back at the office now after Thanksgiving, and we've got 1 month to go to finish off the calendar year here. So just want to spend a few minutes updating you on the markets here to date, talk about some things that we're doing here at the office between now and the end of December, and some things that you could be doing on your own from a tax planning standpoint between now and the end of the calendar year as well. First, the markets. 2023 has been a real nice recovery year. Historically, it's not unusual after a very poor year to be followed up with a bit of a recovery year. So here in 2023, the S&P is up 20, NASDAQ up 36, international up 9, and bonds have just squeaked out a positive return so far on a year-to-date basis. Keep in mind, we're talking about percentage increases after a year in which we've seen percentage declines in 2022. If you start at 100, and you lose 20% on the way down and then make 20% on the way up, you're still not back to 100. So the markets have not yet gotten back to their peaks of the end of 2021, but it's been a really nice year from a recovery standpoint. The Magnificent Seven, these are the 7 companies that have really carried the S&P 500 for its returns on a year-to-date basis. There are NVIDIA, Apple, Microsoft, Google, Facebook, Amazon, and Tesla. Those 7 companies comprise roughly 16% out of the 20% return year to date for the S&P 500. If you owned the index, but the 493 companies other than those 7, the return is only positive 4. But because those 7 companies have done so well, the index as a whole is up 20% year to date. The diversification of a portfolio really matters this year. What you see in front of you are the 11 sectors that typically comprise the S&P 500, and it shows you the year-to-date returns of each of the sectors. So on the left side, you see utilities, healthcare, consumer staples, energy, and real estate. Those 5 are negative. And on the right side, you see technology, communications, and consumer discretionary, those 3, which have had phenomenal years. Again, they're really just, for the most part, recovering from some of the losses that they had in 2022. We are reminded quite often that things that are doing really well right now will potentially run out of steam, and the things that are doing poorly are potentially trading at a discount and perhaps provide themselves with some decent buying opportunities. So less interested in throwing money at things that have already done really well, more interested in identifying the things that will do well next. Utilities, healthcare, staples, and energy have continued to struggle for their second year in a row, and we're paying a little bit more attention to those sectors. When we get into December, we start to think about making sure that we've done all that we can do from a tax planning perspective. So there's a few things that we want to share with you that we're working on, and then a couple things that we'd like you to consider. The first is what's called tax loss selling. During the year, if we sell an investment that's been trading at a capital gain, and then we sell an investment that's trading at a loss, the gain and the loss can cancel themselves out to mitigate or minimize tax consequences. As many of you know, you can write off $3,000 against your income for a loss, and anything beyond $3,000 will be carried forward into future years. So within the portfolios between now and the end of December, we'll be scrubbing them to make sure that we've done all that we can from a tax loss selling perspective. Clients who are looking for potential write-offs, oftentimes this is for someone who has sold a business or had a lot of income coming in during the year, or some event in their life that created a lot of taxability. A DAF, which is a donor-advised fund, is a fund that we can create, or that you can create. When the money goes into this account, it counts as a charitable gift, even though at the moment you're not giving that money directly to a charity. So we create the DAF account, you put money in or shares in, and that counts as a charitable gift for 2023. So this can be something to consider for someone that is looking for write-offs right now, but is unsure as to which charities they want their funds to go to. In future years, when you use money from the DAF to contribute directly to a charity, that gift is not tax deductible, since you're taking the deduction now by putting money into a DAF. So if you need a significant year-end write-off, let's have a conversation about DAF to see if that's appropriate for you. In terms of other ways to minimize tax consequences, this is really for those who are over age 70 and a half, or those who are over age 73 and taking what are called their required minimum distributions. Often clients will ask, is there any way to not pay taxes on their required minimum distributions? there is one way, and that is having some or all of the required distribution be paid directly to a charity instead of paid to the client. What that does is that brings their top line of their income down so that they're paying less tax. So if you have not yet satisfied your required distribution from your retirement account, if you're looking for ways to avoid income, let's have a conversation about having some or all that money paid directly out to a charity of your choice. We have a couple of weeks in December where we can hustle to try to get that done for you. So that's another way for those who are in their 70s to try to reduce taxable income. Finally, in terms of gifting, whether it be year-end gifting or gifting next year, still in 2023, $17,000 is the gift exemption from one human being making a gift to another human being. If you tend to do your gifts in January, keep in mind that in 2024, that exemption goes up from $17,000 to $18,000. We do think that estate planning and gifting will become more and more of a topic to talk about. The tax code in this country sunsets at the end of 2025, which is actually not that far away. Right now, from an estate tax standpoint, one person can leave behind between 13 and 14 million with no federal estate tax. That exemption is set to revert back in 2026 to 7 million. So ongoing gifts, it's a good problem to have, but ongoing gifts between now and then will certainly be something that we'll be talking more about. Finally, another year-end planning item. If you have not yet maximized your 401k contributions at work, for those who are still working, please do so in your next couple of paychecks. The limit for those under age 50 in 2023 is $22,500. That will go up to $23,000 in 2024. So if you're on track to maximize, there is an increase for next year. So please reach out to your payroll person to make sure that at least for next year, you're scheduled to do the maximum of $24,000. For those who are over age 50, you have a catch-up provision, and the 2024 maximum increases again, goes up to $30,500. So for those who are still working, please take advantage of your employer-sponsored retirement plans to try to maximize your tax deductions there. So been a pretty good year in the markets overall, a nice recovery year, which is nice to see. It's always painful when we have years like 2022. Please give some thought to if you've done everything that you can do to minimize your taxes as appropriate, whether a DAF is correct for you or you're in your 70s and you can do what are called qualified charitable contributions with your required distribution or maximize your payroll contributions. Really, these next 4 weeks are the time to make sure that you're not leaving any extra money on the table. So we'll be back again in a few weeks, probably right after the first of the year, where we take a look back at the data from 2023 and start to do some 2024 planning. As always, thank you for the trust and confidence that you place in our firm. We really appreciate it. It's been a good year overall. And please, if you need us, reach out to whomever it is in the firm that you tend to communicate with the most, and we'll get right back to you. Thanks again.